All right, so welcome to another teaching. We are still in our YouTube mentorship. The way I see it, I think that we might be pushing into November because we have not still been able to finish up. Right, I think we will be pushing into November. The way I see it, right, we'll be pushing into November. Right, it's October mentorship. 30 days. So seems as though we'll be pushing into November because we have not still been able to cover up, right? So I know, and I don't want to be, rushing, right? So we'll just take it gradually. I think we have 7 days left. We have been able to cover 21 days already, so 23 days already, and this is the 24th day of this mentorship, right? So um, I feel that we are going to push into November because I don't want to rush, right? Maybe just the first week of November will be done. We're just left with 7 days, right? I'll still see how to make some days 2 sessions so I can, make it faster, right? But we will still continue, right? So, in our last teaching, I taught you guys about, I gave you guys a real market mentorship episode, how, I actually analyze the market in real time, right? What I'm looking at and all of those things, right? Now, for someone that is not, now someone be asking me, what about me? I trade with Fibonacci retracement levels, right? So that brings us to ICT Optimal Trade Entry, right? ICOTE. So OTE stands for Optimal Trade Entry, right? Optimal Trade Entry. And OTE refers to fib levels between 62%, right? 62% to 79%. And this is what ICT means, right? It refers to Fibonacci levels between 62% retracement level to 79% retracement level. Now, ICT OTE is a very simple strategy. It does not really depend on so much because when you're using other trading methods, you're using, let's say, breaker blocks, you're using other blocks, you're using imbalances, you're using other fun stuff which you like use demand and supply. In those ones, you have to use specific areas. Like, for instance, now as I'm looking at the charts now, I can see that we have what a bearish order block has printed here, right? Now, when it comes to ICT OTE, you're not using other blocks or anything specific. You're only using what? Fib levels. So only fib levels are the only thing you use. Now, this fib level is drawn this way. For a bullish example, let's say you have a bullish market. I want to use your fib, your ICT OTE for your entry now, right? So your market is bullish. I want to look for you're looking to buy this market. Now, the ICT OTE stipulates that you simply bring out your Fibonacci tool and plot it from this swing low to this swing high, right? When you plot your Fibonacci tool, what's the next thing you do? Remember, I told you you pay attention to 62. So you simply come to your fib level, activate, you remove 50, you activate 62%, and then activate 79, and then activate one more level, which is what? The minus 0.27. All right. Now, I'll tell you why that 0.27 is there. Now, if you bring out your risk reward tool, right, your long position, I placed on 60% level here, right? From 62 stop loss below here, right? This minus 0.27 gives you roughly 1:2.3, right? So that level is a profit taking level. So this is just the summary of this. So from this entry 62 to that take profit, which is what a Fibonacci extension level, right, is just a specific trading pattern. In this method, you're not using other blocks, you're not using anything apart from fib levels. You use your fib levels for what? Your entry, and use your fib levels for your take profits. Of course, you can take partials there because this is not up to 1:2. It's like 1:1.65. So most of some people like to extend to this point. So you can get at least 1:2.3, like 1:2.2, that about, right? So that's the purpose of extending it higher. So you can get at least that 1:2 point something. That one is a 2.3 or thereabout. So I just want to put 2 point something, right? You want to be getting at least double of what you risk, right? So that is the main reason why we extend it. And now, ICT OTE is this is how it is used. Right now, you must not put your entry at 62%. Of course, if you're able to see a good entry, maybe inside there, anywhere inside is a good entry, right? It's not specific that you must use 62%. If maybe you see a reason why price should drop to 79, you can put your limit there. And this will in turn give you what a better risk reward, right? This give you a better risk reward because this is for even for that to not be 1:3, then to this high not be what 1:4.5, right? So, but ideally, to avoid missing out on entries, your entry should be at what 62%. Right? This is the main method that is ICT OTE is used. Your stop loss below the swing low, and then this. Now another thing you must notice that there has to be some form of liquidity at the top here, right? You know, remember I've talked to you guys about bullish and bearish markets. That whenever you're buying, you want to see liquidity at the opposite end. You should take out some kind of liquidity or something of that sort, right? So this is how ICT OTE is used. Very simple method, and it's used on the lower time frame, right? It's used for entries. So of course, you can use it for your high level PY, but it's mostly used for entries. And what are different entries? You can use it anytime. It depends on the kind of trader you are. If you're a swing trader, of course, you can be using 1 hour, 4 hour. But if you're a day trader, you're using 5 minutes, 15 minutes, 1 minute, 3 minutes, all those lower time frames. But ideally, ICT is optimized for 5 to 15 minutes, right? If you're a day trader, right, it's best used between 5 to 15 minutes for a day trader, right? So maybe you take trades within a day, you take short-term trades. And so for short-term trader, ICT OT is best used on the 5 to 15 minutes, right? 5 to 15 minutes. That is the best time place to use it. 5 minutes time frame, 15 minutes time frame, right? That is how best to use it, right? Because it's a very simple method. Just identify if the market is bullish. When market breaks structure, you take your 50 from the swing low to the swing high, and you're done, right? Now, the best example is just the same thing for the best example, just the same thing. If you're bearish, just the same thing. If you're bearish, of course, you will see the market make a low, right? So very simple. You see, this is the market has made a new low. So you measure your range from this high to that low, right? That is your OTE. So when price returns to it, you simply put your sell limit where at this point here, stop loss above the high, and then of course take profits at the minus 0.27. Of course, you mustn't use 0.27, right? You cannot target 1:2, right? Like you can always target 1:2. Like this is 1:2 somewhere around there. So you cannot target 1:2. It's not compulsory. You must allow price to hit that 0.27, right? So this is a very simple method. Just enter at 60%, stop loss above the high, and then you target 1:2. So that's a very simple method. Just the market comes there, you're in, right? It's very nice, very simple to see. Nothing difficult. Just plot of fib levels, you're done. That is all. Right? You plot in your fib levels and you have your trade. Right? That is basically what this thing is used for. Just your fib levels and you have your trade. That is all. Nothing much, nothing less. Right? That is all about ICT. Now let's also look out for just maybe if you could see some examples from the past data, right? So let us look at the past data to see if we would have found some examples on this, right? All right, so let's just look at this, right? So looking at this chart, I can see that this was during New York session. So you can see that there was a kind of market structure break here. Market broke structure here. Although market still pushed bullish, but markets broke structure here. If you bring in your fib tool and then you plot from here to this point, you can see that there was a very good entry there. So if you place a limit here, 1:2, there's a nice entry. The market dropped, although it did not drop as we would have loved, but you can see that there was actually a very nice one there. All right, so that is it. Let's just go back more, a little bit more back. I'm using the 15 minutes time frame just to show you something. Now, look at a very good example here. You can see how price ran Asian liquidity and then came back during the London session, right? So if you bring out the Fibonacci tool and plot it from that high to this low, if you plot it here, you can see very simple one, right? Because it markets came to 62, even came as high as 79. So entry would have been at the 62%, targets down here, right? Can see a very, very smooth run. They'll take profits, right? Very, very smooth run. Did not even give any stress at all, right? So this wasn't a good example at all. Or let's just zoom out and see the bigger picture. So I can see a bigger picture one here. So look at that one here. So if you take out your flip tool from here, you drop from this swing high down to this swing below. You can see the same thing also occurred here. Right? You can see our price came what? Although this would have been a very large trade because from year to year was like uh, let's say like 20 pips, like I believe it's 20 pips trade, right? And I'm going with this smaller time, this shorter one, right? But you can see how markets made the low. You can see the swing. Markets came to what our 2% level, right? And then we saw the drop down to what our minus 0.27 level, right? So if you call this one nice, if you call this one was tighter, because this one gave a smaller stop loss, but this was the overall range from that high down to that low. That was a very good example of an ICT OTE. Right? It's a very, very simple trading method. Nothing, there's no rocket science to it. Just identify your price swing and then you wait for market to give what a retracement. I look at another one here. Markets ran Asian liquidity and then broke bullish. Where did we hit our entry? Very simple. From if you draw your flip tool from this to that. So you can see very simple one, very simple trade. Right? Very, very easy trade. Right. 2%. It came as low as 79. That is fine. You can see market was move towards 0.26. And now 0.27, you can see what the highest liquidity resting here. So look at this liquidity was resting just at the top here. Right. We also had this liquidity as well on top here. So you can see how this liquidity area aligned with our take profit level. So you can see how this liquidity level, it's aligned with our take profit level. That was a very nice one. Buy into that high. Right. This is a very simple method. Very, very simple trading method. Right. You have to identify the trend of the market. Like this market now, I can't really see what direction it was going because, in my opinion, this was a kind of range, right? Market was not, you have to see very clear defined range. Of course, I'm not using lower time frames for today. You have to obviously go to the higher time frame to get a very better feel for what you're doing. Look at this one now. Look at this. Market, it was bullish. We ran Asian liquidity, broke above. So if we're judging by structure, would have said, okay, this is our range. Was this high was taken out, then we had a retracement, and then broke a new high. This took out Asian liquidity, and the price returning in the London. You can see how price came there nicely. Right, you can see 60% level. Right, we bought and we made it, we hit this high. Now, price did not get up to 0 minus 0.27, but told you guys that whenever we hit the zero level, of course, you can take partials. Right, you can always take partials. Actually, seeing that we made some kind of equal highs here. When price pushed here, maybe I've taken some partials, or maybe even take it all. 1 is to 2.1 is to 1.7. It's not so bad, right? It's not so bad. 1 is to 1.7. Look at that one here. It's also very deep retracement. We took our Asian liquidity, took our London liquidity, broke down. Then you can see how price came to our ICT OTE. Of course, we don't use candle long weeks, we use a body. So from here down to this was the news candle. So we won't use the news candle. So let's use this. We'll use low here. So markets came back to 60% level and then dropped. Right? The reason I'm not using this one because this was a news week. So we don't really use news weeks. Right? We don't use this week because that was the news. So we use the one that's formed before the news. Right? So this was the one that formed before the news. That one. So we use the holder that formed before news. So very nice trade. Drop off. That was smooth. That was smooth. All right. So that is basically how this has been booking. Right, I can see a range from this high down to this low. So you can see another one here. You draw a swing low high down to this low. You can see how price came to the 62% level. When I can see market as it dropped, right? Dropped about our minus 0.27. Right. So this is very, very nice where you can back test and properly test it. So stress test this thing, forward test, backward test, and you have a better understanding and appreciation of what this thing does. Right, so you have a better appreciation of what this stuff does. Right. All right. So that has just been amazing. Right. So it's best used after I've told you guys about skill zone. So if you cannot really see a breaker block or anything that fits your entry criteria, you cannot simply use your breaker block. Also your OT as your entry. So very, very easy trading method, very easy, right? It works best on currency pairs because now I'm looking at this chart, I'm not really seeing that stuff I like to see, right? So that is it. Look at this one, market broke. Look at this low. This is the high, this is the low. So markets came to 60% level. Although I missed this entry, I was very annoyed for missing this entry. I was targeting this other block up there. But if I had used this OT, and this OT was only also in line with what a fair value gap. So look at this imbalance here. Right, there was an imbalance here, right? An imbalance here. So if I use this imbalance, I'd have maybe beaten this trade. So it was in line with that OT. So OT was the answer here. So you can see how market you see why I said I should take price above zero or below zero. You can see price went below zero and then reversing. So sometimes you can just take your stop your TP below zero or take partials there so that you don't, see this kind of retracements. Whenever market takes out zero, especially when there's imbalance below or something that can push price up, right? You can take partials at that zero level, right? You can take it at that zero level, right? So don't, it's not static. You only use that zero level, you only use 0.27 level when you feel that price can go lower. Let me explain this. Now you use 0.27 level for take profit when you feel that price should go lower. But in this case here, there was equal lows there and price what breached it, right? So price breaching this equal lows means that there's some kind of liquidity that was taken out here. So you can simply take off partials, right? You can take off your partials here. And if you look very carefully, you can see that there was an imbalance here, which is the reason why price pushed above. So be very mindful of this kind of issues. You can see this imbalance here. So this was the last imbalance. I told you guys that the last imbalance has every tendency to move price the opposite direction. So this was the last imbalance between what this high and this low, right? Between this low and this high. This was the last imbalance there, right? So you'd have just taken profit at this zero level, right? Zero retracement level, and then seeing what price would have done after that, right? So I think this is where we're wrapping up. If I don't want to guys, this is very simple strategy, very simple. Identify the range of the market, look for liquidity at the opposite end, and simply what use plot your FIB to, and then you're in, right? Very simple trading method, nothing difficult when it comes to ICT OTE, right? Of course, always target liquidity, liquidity target, wait for Asian liquidity to be run out, use all this liquidity things I've taught you guys earlier. So this is just a combination, right? So it's just a very simple trading method where you can also use your FIB levels, right? You don't need to use other blocks or anything, just nothing like other blocks, nothing like favor gaps, just using your FIB levels. That's all, FIB levels, just FIB levels trading. Very simple method of trading, right? If you just like it simple, just keep it simple, just free levels. Although I don't use this all the time, but I do use it when I cannot really see a reason why price should go my way. So I just use it to kind of get a feel for what price is doing, right? So that's basically what we're talking about. So have a wonderful day. See you guys in tomorrow's class. Cheers and God bless.